Good afternoon. We're going to get started. Thank you for attending today. We are going to be reviewing the new short-term products that we have recently added to our portfolio, but we are also going to be reviewing some additional strategies to enhance your sales opportunities in the individual market in terms of ancillary and Medicare. Flexible Benefit has been in business for 28 years, and we're currently located in Rosemont, Illinois. We offer two business segments as a general agency and a benefits administrator. As an independent authorized general agent, Flex offers the multiple carriers that are listed on this slide. We can provide you with services for small group, for individual, and the Medicare marketplace, and will provide assistance with sales, service, marketing, and business processing functions. Flex administers account-based health products nationwide. We are a direct HSA vendor for HCSC, including Blue Cross Blue Shield of Illinois, Montana, New Mexico, Oklahoma, and Texas in both individual and the group market. We provide debit cards, cross-tech technology, access to our benefits portal, a mobile app, and educational resources. And we can also assist you with implementation and claims with follow-up by our service staff. Why are we here is a big question. The individual under 65 market network has changes, and the cancellation of special enrollment period compensation has been stressful for many. I need to embellish on this slide a little bit. 3 of the under 65 carriers have discontinued special enrollment compensation. Another of our carriers will be stopping compensation effective 7/1. There will be one additional under 65 carrier that is continuing the special enrollment compensation. However, we do anticipate that with a 30-day notice, the compensation will also be ending sometime during 2016. So we're pending notice on that. Ultimately, Flex's goal is to bring new sales opportunities to the table for you. Commissionable sales opportunities with products that will also help your clients. This presentation is going to be introducing the 2 new short-term carriers. We will discuss an existing short-term carrier and address sales strategies with ancillary and Medicare. Much to talk about. Today we are introducing Peterson Easy Short-Term and the HCC Short-Term Complete plans. These carriers have brought additional coverage options to our existing United Health One short-term product. We're going to discuss United Healthcare a bit. We are going to review their existing short-term coverage, and then we'll be moving into the new short-term product benefits. UH1 offers 5 different short-term plan options. We'll look at the excellent benefits of the UH1 short-term plans in order to compare to the HCC and Peterson short-term options. Note that the minimum age requirement is 19. Dependents under 19 can apply, but only with a parent or legal guardian. The option to purchase a $10,000 deductible plan will help in containing the member's cost. But if selected, we recommend that you discuss the United Health One ancillary products to help bridge that out-of-pocket cost. The UH1 supplemental accident rider can be added to the short term to help bridge the out-of-pocket costs. However, note that the rider will terminate when the short term ends. So perhaps a better option for your clients would be to offer the standalone Safeguard ancillary products. There's accident, critical illness, hospital indemnity. These standalone products will remain in force after the short term ends until canceled by the member. This would be a separate paper application or can be bundled when applying online. The large Choice Plus network is available to UH1 short-term members, and the term is by day, not month, with a minimum of 30 days of coverage. Pre-existing is excluded. The UH1 short-term product is not a guaranteed issue product. This is an overview of all 5 of the UnitedHealth One short-term plan options, offering a range of options regarding office visits, prescription coverage. The supplemental accident rider is available with all 5 of these plans. We'll now talk over the new HCC short-term complete plan. The lifetime maximum on the HCC plan is up to $2 million with the option for a lower deductible of $500. The insured selects if they choose an 80 or 50% option for eligible expenses up to $5,000 in coinsurance. So as an example, a $500 deductible with an 80-20 coinsurance, the next $5,000 of eligible expenses will be split 80% by the carrier, 20% by the member. And in this example, the max out-of-pocket would be the $500 deductible plus an additional $1,000 in coinsurance, equaling a max out-of-pocket of $1,500. Using the same example of a $500 deductible and a 50% coinsurance, the max out-of-pocket would be $500 deductible plus a $2,500 coinsurance, and the max out-of-pocket would then equal $3,000. There is an extension of benefits up to 90 days if hospitalized beyond the term of the policy. This can come in handy. We've seen it happen here where someone does get involved with an injury or illness, and the extension on the benefit has stepped in and really helped these individuals. So another great benefit of the HCC plan. There's no outpatient RX available. It is a discount card only. The First Health Network is available on this HCC plan. It's quite extensive. As you can see, there's 5,000 hospitals, 90,000 ancillary facilities, and more than 1 million doctors. The out-of-network benefits are covered, will not be allowed the discounted fee for the service rendered. So, in other words, what you're accustomed to with the PPO discount would not be applied to any out-of-network benefits. The client or member would need to pay the full cost of that service if they do go out of network. So, of course, as always, we always recommend remaining in network. On the month-to-month payment, there is a month-to-month payment, and there's also a single payment that is available. The month-to-month payment, if canceled within the 10-day free look, will receive a full refund. The single payment refund in full month increments will be allowed with proof of new coverage. There's no prorated refunds. Now, the short term with HCC is underwritten by HCC Life. And we also have, which is a nice feature, is the $50 urgent care copay. Okay, we're just going to step into Peterson International, and Peterson is the easy short-term plan options. Peterson's child-only option is available to infants as young as 2 weeks of age and available to clients through to age 64 and 11 months. I actually failed to mention that with HCC, they do have a child-only option. It begins at 2 years of age up through 64 and 11 months. So we have 2 good options. We often have calls for individuals that are looking for child-only policies. Having an option of an infant as young as 2 weeks or as young as 2 years is definitely a plus. Peterson does not require coinsurance. This plan has 100% coverage on all eligible expenses after the deductibles ranging from $100 up through $5,000 have been satisfied. I stress eligible expenses because you have to remember with short-term that pre-existing conditions are not covered. If there was a claim that was submitted, it is not considered an eligible expense and therefore would not be applied toward the deductible or coinsurance. The accidental death benefit is included in the premium, where the hazardous sports rider is an additional cost of 25%. This product does offer RX coverage up to $500 after deductible. There's no prescription card, no particular pharmacy that you'd have to go to. With Peterson, monthly payments must be canceled within a 10-day period, the free look period. However, if a cancellation is needed, you must put that request in writing, stating when you want the coverage ended, submit that request, and the next installment will be canceled on that monthly payment. There is an extension of benefits that will continue beyond the term of the policy for 30 days or until discharge, whichever comes first. And the Peterson Easy Short Term is underwritten by Lloyd's of London. The applications on both Peterson and HCC are online and very, very accessible. We will provide you with the links and any questions, of course, please reach out to us and we'd be happy to help you. This short-term summary is basically looking at some of the main differences between the United Health One policy, the short-term, versus HCC and Peterson. And as you can see, although we enjoy the UH1 plan, we sell it often, there isn't a platform for child only, where, as you can see with HCC, as I mentioned before, it is for children ages 2 through adults 64 and 11 months, and Peterson begins at age 2 weeks and 64 and 11 through 64 and 11 months. There's no free look period with United Health One. However, United Health One will prorate any refund with a phone call. So if a client does make a phone call and needs their short-term canceled for whatever reason, perhaps a group plan is falling into place, they will be prorated and refunded. With HCC, as I mentioned, there is a 10-day free look period, as there is with Peterson. The proof of coverage is needed with HCC, and there is a refund that's available or cancellation available with no prorating. The payments, as you can see, it's monthly. All of them are 20%, the monthly or 20% discount for the HCC and the United Health One if you do have a single payment. So you will have a lower cost to you with a single payment. Child only, as you can see, there's no child only available with UH1, but it is available with HCC and Peterson, one of the bigger pluses. And the deductibles range with United Health One. It does go up to $10,000, again, to assist those that want to keep their costs low. The minimum deductible is $1,000, where with HCC, we can get a $500 deductible or a $100 deductible with Peterson. The biggest thing I think that we're excited about with Peterson is the guaranteed issue feature, because we do find that there are individuals that fall in between that open enrollment period and special enrollment period, and they do have medical conditions that would basically be knocked out or declined on an application. With incorporating Peterson into our portfolio, we now can offer this short-term And although pre-existing conditions will not be covered, at least they would have protection for any injury or illness that would occur that was over and above any pre-existing. Commission is paid at 20% across the board on all of these carriers. Now, remember that short-term is never considered a replacement for permanent coverage when permanent coverage is an available option. These plans are meant to bridge the gap between open enrollment and special enrollment, or when anticipating employer coverage, and COBRA is not an option. Because short-term plans do not offer minimum essential coverage, there may still be a tax penalty. Please contact myself, Larry Kassman, or Joe Gladys as your sales consultants with additional questions and to provide you with the necessary appointment paperwork for these carriers. We would be happy to assist. We have sent out some appointment paperwork. If you have any questions about completing that paperwork, you can always reach out to our licensing department, and they would be happy to assist. I mentioned earlier on that we were going to talk about some sales strategies, and there are more opportunities available to you through the additional products, and they will remain, and they will remain with compensation. So this is why we wanted to enhance this and make sure that you knew that there was more out there to help bridge that gap without having commission during special enrollment period for the under 65. This is an overview of the supplemental and ancillary products available to you within the individual market. We have life insurance, term life, dental plans, vision, hospital indemnity plans, critical illness. Flex will soon provide a new process for quoting and enrolling with the biggest names in the life insurance field. There'll be more details to follow soon. We're quite excited about it. We think that, we anticipate that we're going to be getting a lot of interest in this product, and we soon will be disclosing what this is all about. You have the ability to offer standalone dental products. All of the carriers listed above, with the exception of Blue Cross Blue Shield, offer standalone dental to both your under 65 and 65 plus members. Blue Cross is not available to the senior market, but is pediatric compliant, as is Delta Dental. UH1 has recently introduced their standalone vision product, which is also available to both under and over 65 clients. Medico is a carrier that we're going to be bringing on board as well. Medico offers a hospital indemnity plan, which will help bridge the high out-of-pocket costs with the short-term plans. When we get into the sales strategies, we want to just enhance, again, that there's so much that we can provide you in the way of workshops, tools, helping you to reach the path that you want to get on to become successful, more successful than you are already. Again, we know that it's been difficult without the special enrollment period commissions, and this is why we want to make sure that you know that Flex is here for you. And we have incorporated strategies for you to dramatically increase your sales opportunities. Our goal is to help you find that path that will provide opportunities while at the same time filling the void of the lack of the special enrollment period compensation. Although we do not recommend electing short-term over major medical when that is an available option, we can help both you and the client by providing any three of the short-term carrier plan options, bundled with the commissionable supplemental and ancillary products that we discussed. You will also be gaining client retention by not only being a valuable and trusted source of assistance, but by offering a product portfolio that will reduce some of the client's out-of-pocket expenses. Our second strategy, and this is very important, individuals are aging in reaching the senior market at a rate of 12,000 people per day. This is a tremendously underserved market by agents and an excellent opportunity to become appointed, to become certified, and we will help you every step of the way. There are structured commissions at a much higher percentage than the under 65 market. The individuals entering the senior market need guidance. With your assistance, you can provide the support and help balance out their benefits with supplemental products like final expense, indemnity, dental, and vision. Okay, I think that slide just went out of order a bit, and I apologize. We're still on the sales strategy number 2, and if you are new to Medicare sales, if you are new to Medicare sales, don't hesitate. Flex has a clear-cut strategy and training roadmap to help you capitalize on a market that is fast-growing and an amazing opportunity for you. The annual enrollment period for Medicare will begin October 15th, and it will end on December 7th, and Flex will help you in getting ready to sell. We talked about a path to success, and the path to success for those that are not currently in the health and life insurance market would begin with getting your health and life insurance, going through the course, taking the exam and completing your exam, attaining your producer license, carrier contracting with Flex's assistance, Flex's training and workshops, and coaching, which we would also do with you. Flex will also assist you in the initial stages of becoming a licensed producer. We can guide you through that certification process, as I mentioned, and this will help maximize your sales opportunities. Flex will also provide you with product knowledge and sales strategies through one-on-one coaching, webinars, and workshops. We maintain an open-door policy, and we're here as a resource for marketing ideas, product training, and consultations on specific client needs. I think what's important right now is to try and help summarize that you've all been experiencing the loss of commissions during the 2016 special enrollment. There are 3 paths that are available to you to help replace that lost income. There are the short-term health plans, along with hospital indemnity, supplemental accident, critical illness. We touched on final expense. There's Medicare, of course, and our group sales. There's much opportunity out there. If there's any confusion as to where to begin, you know that Flex is here, just a simple phone call, and we'll assist you. By mixing in the ancillary products that we discussed, it provides your clients with that more robust protection. It generates increased earning potential and increases client loyalty and retention. And hopefully, going through all of these options, I know that we wanted to introduce the brand new short-term products to you, but we also wanted to combine that with all of the other opportunities that are out there in the individual marketplace. So hopefully we've sparked some of these ideas to help you survive during these times, and to remember that Flex is here as your partner to help. If you have any questions, please feel free to contact us at any time. Again, Larry Kassman is here, Joe Gladys, myself, Mary Ann Graben, are all here to assist you. Please feel free to contact us at any time, and we will get you started on that path to success. Appreciate your time today. 1 second, I'm just checking. Okay. No, you know what? There's some questions that I think some of our brokers are going to be emailing us on, and we'll respond that way. So again, if you do have any additional questions, please feel free to reach out to any three of us, and we will help you. Thank you again, and have a wonderful day.